Thanks, Hannah. My name is Kaide Kawauchi. I'm the program manager at the Intentional Endowments Network. I also support IEN's Diversity, Equity, Inclusion Working Group. So very briefly, before we dive into today's topic, for anyone who's new to the Intentional Endowments Network, we are a nonprofit collaborative peer learning network supporting university endowments, align their investments with institutional mission and values. We do this in a number of ways, including in-person forums and events, peer networking, sharing resources, and providing educational venues like this webinar. So this webinar is actually the first one of the series focused on racial equity investing and is timed with the launch of our upcoming racial equity investing primer for college and university endowments. And this resource is a collaborative work of IEN's DEI working group members, including the panelists on the call today, and is really intended to be a catalyst for conversation and action on racial equity or fiduciaries of university endowments. The primer is scheduled to be published on August 17th, so please stay tuned for the full report and other webinar content that we'll be putting out around racial equity investing. So in the primer, we have a number of call to action items for fiduciaries, as you can see on this slide. These DEI webinar series will be used to dive deeper into some of these call to action items and focus on how these action steps can be achieved. So today we'll be looking at the allocating to diverse owned asset managers. It's in blue under invest and engage. So with that context, I will turn it over to Justin to introduce us to today's speakers and lead this conversation. Take it away, Justin.
Thank you, Kaide. It's a pleasure to have everybody here today and to be on. Thank you so much to IEN for having me and the rest of the panelists on for a great event. Today, we're going to focus on how we actually allocate to diverse managers. By way of background, my name is Justin Wilson. I'm a director at the Diverse Asset Managers Initiative, where we focus on increasing the assets under management for diverse owned firms. I'm joined today by three lovely panelists. We have Tiffany McGhee, CEO and Co-CIO of Institutional Services at Momentum Advisors. Jasmine Richards, the Senior Investment Director and Manager of Diversity at Cambridge Associates, and Anthony Russ, the Chair of the Investment Committee at Warren Wilson College. All of their bios are attached. I think Hannah has included them in our webinar, so everybody has access to those to read more fully about all the amazing things that these people have done. But again, very happy to have you all here today and look forward to getting started. So to get us started, we'll just talk about the current landscape and the trends that we're seeing in 2020. Jasmine, do you want to go ahead and kick us off with that?
Sure. So I think that question can go several ways. So I think, first of all, it's a combination of being in an interesting time within the market. Obviously, this year with the impact of COVID, started with a lot of volatility in March, and I think that created a lot of opportunities, particularly for within the foundation and endowment space, depending upon your liquidity situation. And then what we've also found, and I think is integral to the discussion here, is that we also are in a very unique social environment, and particularly with an emphasis on action. And what I think is compelling about this period that we've seen with the clients that we're working on is that there really is an environment and focus on being more actionable, not really participating and focusing on, what has been phrased diversity theater at this point. And the conversation that we are having are very, I think, focused on specifically how to address the systematic inequalities and being creative and thoughtful about how to address those. So I think it's an interesting time that we're all living through right now.
Amazing. Anthony.
So just to piggyback on what Jasmine said, sort of the terminology of the day is action. And so we're getting a lot of calls from other endowment funds as to, what we've done in the effort to increase diversity amongst our investment managers. And what I've done is really try and lay out our journey for endowment funds as a potential pathway for them. And it really starts with the investment policy, right? People want to know what are we going to do? So it really starts with the investment policy because, you know, as most organizations, that investment policy is the governing document of how endowment funds will manage their portfolios. So within that investment policy, you know, we have to be explicit in terms of our desire to increase diversity amongst our asset managers, right? So in 2015, we created a responsible investment policy that was embedded within our overall conventional investment policy. And it spoke specifically to the need for diverse asset managers. And the language, and I'll just take a second to read what we wrote, is the IC and the investment consultant will seek to utilize a diverse group of investment managers, including firms of color and women-owned investment management firms. So that's where it has to start. If we are telling other endowment funds that if you are not that explicit within your investment policy, then you're really just being performative in your interest in the subject matter. The second area that we tell them is important after incorporating that specific language in the investment policy really is you have to make sure that the organization's values are aligned with your consultant or your Co-CIO, and that you may have to make sure that you're both on the same page regarding the utilization of diverse asset managers. Traditionally, as many of us know, in institutional investors who have prioritized diverse asset managers or the use of diverse asset managers, it's been a push-pull relationship with consultants. And the typical refrain from consultants is, you know, we're colorblind as to who we hire. Well, you know, that sounds good, but at the end of the day, it doesn't factor in key factors like unconscious bias, which we all are subject to. So making sure that you are aligned with your consultant or your Co-CIO is critical. And then the third step is accountability, right? Accountability to making progress in that area, right? So as an investment committee, as the chairman of our investment committee, we're accountable to what progress we make. We also hold our consultant / Co-CIO accountable for what progress we make. I say that we've made some good progress, but we're not there yet. Currently, we've got 14 indefinite investment firms managing money for us, and 4 of those firms are firms of color. So we're making progress, but we can do better, and we're planning to do better soon. So I'll stop there for now.
Thank you for that, Anthony. I think your push on accountability is incredibly important right now. As we talk about action and holding people's feet to the fire, for lack of a better term, to make sure that things are getting done. I think we're in a time of real movement, and we want to, as Jasmine pointed out, take advantage of this moment. There's a lot of things that are swirling on in life, in our economy, with the pandemic, with the Black Lives Matter movement, and it's important that we take advantage of the moment to make some real change. Tiffany, what are your thoughts on the moment?
Oh, the moment. I feel like I've been waiting for this moment for quite some time. And let me just kind of level set. So my firm, Momentum Advisors, we are a diverse-owned institutional advisory firm, right? So tad different than a consulting firm, meaning that we construct entire portfolios and we do a little bit something different. But not only, and I want to be specific, and I think it's really important when we're having discussions like this to be specific. So we are a Black-owned firm, a Latina-owned firm, a woman-owned firm, which I think, again, is incredibly important, because I think we get caught up in this word diverse, and it's very important. But most of our clients are foundations and endowments, and if they are wanting to be intentional, we see a lot of them wanting to be intentional about doing things through a racial equity lens. To Anthony's point, if you want to do that, you need to be very specific in your policies, and especially in your investment policy statement. Sorry, and really, call it what it is, right? Whatever your intentions are. And so about 2 years ago, maybe about like 4 years ago, I created the firm's institutional investment practice. I built it, and it was a very, very long road. And so first, I think that, my partners and I really understand the stories of so many of these diverse owned asset managers who are smaller sometimes. A lot of them are entrepreneurs, so we're entrepreneurs. And so we understand what it is to leave a big firm, a notable firm, and have success at that firm and want to do your own thing. We understand that journey, from people not answering your calls, people wondering if you were successful because you were at that big firm, or was it actually your talent? So on one hand, we understand that journey. And on the other hand, we realize that, our number one concern, our number one job for our clients is to first generate alpha, minimize risk, and be conscious of fees. And so with that, with all of those things kind of brewing, I looked around probably about 4 years ago, and I was seeing conversations about ESG in one room, and in a separate room, conversations about diversity. And I was wondering why we weren't having the same conversations, why we weren't in the same room. And so that was very interesting to me, and kind of flash forward, we've kind of see this evolution where today, in this moment, we're talking about ESG, we're talking about diversity in some of the same conversations. And so again, and I tend to do this whenever I speak, I level set that ESG really is taking these responsible environmental, social, and governance metrics and lining them up alongside the same financial metrics we would use to identify a strategy or company. And those responsible metrics tend to lead to sound management, so forth, and better returns. And that really is the case. And so what I'm seeing in this moment is, number one, there's more data. So 2 years ago, 3 years ago, if you were to Google ESG, or if you were to Google something like that, impact, any one of those things, something related to the environment would come up because there was so much data. Now, there is even more data on the metrics of these things. So first of all, there are organizations out there, you can even look on Dami's website, plug Justin, that have been doing research around diverse owned asset managers for eons. There's so much, of course, research out there. We all know on average they tend to outperform. But now we're seeing more data points all around. And so I'm really, really excited. I feel like I'm not totally a sports person, but I feel like we're in the Super Bowl of ESG. And, there's so many data points coming out socially on that S, how companies, how brands are responding to COVID-19 and how they're responding to Black Lives Matter. And all of these data points, I really feel like we're seeing the S now influence the G, because it's not enough to come out and make a bold statement. How does that translate to hiring? How does that translate to the G? Which of course, diversity, really the case for diversity across all industries is that if you have, more ideas, you get to the solution quicker. And so Anthony mentioned something earlier about a consultant, or maybe his consultant, saying that they were colorblind. And so I'm gonna quote Melody from Ariel, and saying that we don't have to be, we do not need to be color blind. In fact, that's actually worse. We actually need to be color brave. And now is the time where we have to do that.
Thank you for that, Tiffany. Thank you. I think that it's important to note the push on data. As Tiffany pointed out for us, the diverse asset managers, we do an annual investment consultant survey, but we've also been part of a recent push around endowments. And endowments really looking internally as to who is managing their money, if they're hiring diverse asset managers, and how are they going about finding diverse managers. And really, it's important right now. We're in a moment where we can set a baseline. As I tell people all the time, you don't have to be first. You don't have to have great numbers. We understand that the field as a whole might not look as promising as we want it to in terms of diversity. But what we do have the chance to do is be transparent. The financial and asset management field is a field where diversity and numbers really matter, right? People are tracking these metrics in a serious way, and people understand the metrics around everything. So if you can give me the metrics on your portfolio, you can also give me the metrics on your diversity numbers. You can be cognizant of this. You can make note of what's going on in your ecosystem and become more aware, right? We're in a moment of awareness, of increasing awareness. So how do we continue to build upon that? So I'd love to hear Anthony just talk about how much data there was on diverse managers when you guys first started out at Warren Wilson, and then how you kind of went to build on what you were learning and feedback that you were getting from both the managers and the ICs that you were working with.
Yeah, that's a great question. So, having been in the industry and part of the ecosystem, I had access to data and information about how well diverse managers perform relative to their peers and some of the reasons why. And I was, because of that exposure and access to that information, I was able to, accelerate Warren Wilson College's development in this area. Unfortunately, I think not enough gatekeepers, consultants have access to that information or have had access to that information. And ultimately, consultants or OCIOs are making a lot of decisions as to where capital flows for their clients. So I think it's very important that for endowment funds not to rely purely on their consultant or their OCIO for information and access to diverse managers if there's an interest on the part of the organization to do that. I think you really have to tap in because they just don't have that type of access or knowledge. To some consultants' credit, they are developing dedicated practices for diverse asset managers, right? And Jasmine is an example of that at Cambridge, right? But for the large part, most consultants and OCIOs have been reactive. And I'll give you a perfect example. So the fourth diverse asset manager we hired was a firm called Five Stone Green Capital, right? This is a African-American owned firm, real estate investment firm, and they focus purely on green real estate investments, right? And so this was a great fit for us because of our focus on ESG and environment. And so there was a lot of intersectionality in data and points of connectivity for us and why this would be a great fit for us. Well, this manager was not in our consultants database at all, right? And so, that's the type of access to information and that, we think can help advance endowment funds journeys in this space. There's one thing that the initiative that we're going to be taking up, and this is really in line by IEN's 2020 Belonging Pledge, a commitment to advancing racial equity, which is a commitment of a group of endowment funds to bring the subject of racial equity at our next meeting. Our next meeting is in October. And although we've made great progress, right, this is a journey for us too. We are continuing to evolve, right? And so we are going to be introducing, and this is sort of piggybacking on Tiffany's earlier comments about an NFL analogy, we're going to be introducing a Rooney Rule for the management of our endowment fund. Some of you guys may know what the Rooney Rule is, but it's comes out of the NFL, and the Rooney Rule basically is if there are any open head coaching jobs or senior jobs, now it's broadened to be more than just the head coaching jobs. African American and Latinx candidates have to be interviewed for those openings. So we are going to introduce this type of rule at Warren Wilson College, and our consultant is going to have to, when we have searches, is going to have to put diverse asset managers in the search and show us that data and show us who they've selected. And if they're not selected for the assignment, they're going to have to tell us why and what are the reasons. So that's a specific action item that we're doing, and would certainly recommend that because we do believe that type of rule can, one, increase opportunity for diverse managers of color, as well as women-owned firms. And we know that if you increase opportunities, we believe that's going to lead to real assignments.
Thank you for that. And a big congratulations to Warren Wilson for taking an actionable step to making this happen. The name of the game at the end of the day is alpha allocation. So doing something to ensure that that is happening is a big deal. Because the name of the game is that allocation, and one of the big keys and cogs to that is investment consultants. Jasmine, I'd love to hear your take on how you guys go about finding diverse managers at Cambridge, the importance of a policy and a mandate from a place like Warren Wilson. And then I think it's important to know how you guys are defining diverse. I think that that's something that the industry is still trying to get clear on. What's diverse owned, how are we looking at that? So I think you have just a ton of knowledge and research that can really enlighten us all.
Sure. And so starting with the first part of your question, I think the reason that my role was created is part of the recognition that we can have all the databases in the world, but I think if we're honest about how allocations are working at this point, it's still very network-based, right? Like, just as humans, I think there is something to familiarity. And so I think that we can all work on biases in the long term, but the point in the near term, I think the best way to get around that is to have different people at the table, making those decisions, asking different questions when you are reviewing different managers, attending different conferences. One thing that I really enjoy about focusing on diverse managers and researching those is that, quite honestly, there is a community. And so not only am I going out and finding new ideas, but I can't tell you the number of times that I've been underwriting an individual strategy and a manager will say, I'm happy to have this relationship, hope that we can work together, but let me tell you who else you should be looking at, who else is coming up that could be interesting. One way that we leverage the platform that we have at Cambridge is that not only am I focusing on who are the current diverse managers, but I also want to know who is the diverse talent at the existing firms that we're investing in. If that person, at some point wants to spin out, we want to be ahead of that. One of the largest hedge funds that investors are watching this summer is going to be a partnership where one of the founders is a Latino American. We want to make sure that we're aware of that. Honestly, that was through a relationship that we had on our hedge fund team. And so I think it's really still leveraging the networks, but expanding the networks that we are tapping, the way that we're sourcing ideas. In terms of working with clients, I think it's very important for our clients to we're working with clients similar to what Tony has touched on, focusing on their investment policy statements, what specifically fits, because I think that's one way to leverage this moment to have lasting change. When hearts and minds change 6 months from now, the investment policy statement is still going to be there. It's going to remind people of the goals, as well as I think it ensures that there's an agreement as to what is the purpose and the outcomes that you're focusing on. And I think that that's really important. Really, we are working with clients to start with defining what they're looking for, figuring out a process to audit those goals, go through an implementation process, right? So go out, find those ideas, and to be honest, that's not going to happen overnight. If we're looking to have this moment and measure change 6 months from now, I don't think that honestly would be the proper way to go about this, as well as I don't think practically that's how it's happened. If we're overhauling a private equity program, we have a certain spend rate per year. You can figure out a fundraising cycle, maybe it's 3 or 4 years. We want to see that change come over time because we want asset owners to be committed to those investments long term. And then ultimately you have to measure, right? Like everything, hold yourself accountable through those measurements. And so we're working with clients through all those pieces. Starting with the define piece was your last question. The way that we are working with clients to define what they mean by diverse is very individual. Our approach is completely custom to the individual clients. We have women's colleges that want to focus on gender equality globally. I think that is a noble goal and completely worthwhile of pursuing, as well as we have foundations that maybe are working on social equity that want to focus on racial equality and invest in Black and Latino populations. We have clients that will distinguish between Hispanic and Latino. We have, if you look at the Knight Foundation paper, their definition in that paper is a 25% hurdle, including populations that are demographically underrepresented in the general population, not necessarily in finance. So that will focus on Black, Hispanic, and Asian populations. So I think there's all different definitions that are being used. And quite honestly, I think depending on your organization's specific goals, they're all worthy. And so in my role, what I think is my responsibility is for us to be able to be prepared to respond to those needs. And so being aware of who are the best in class managers among all these different demographics, and then pair that with the individual's client goals.
Thank you for that. A couple of things that I heard you say that I want to reiterate are, particularly to our audience, is the amount of control that people have as a client, the importance of the investment policy that Tony pointed out, and the importance of being able to define what diversity looks like to you. We're in a place where this doesn't have to be cookie cutter, where you can really make some strong recommendations in terms of what you want, and in terms of even saying, as Tony pointed out, like what managers you want. If you found a manager on the side via networking that Jasmine pointed out, recommend them to your consultants and let them know what that looks like, because you're giving them an opportunity to be in a network that not only is going to benefit you, but might benefit them long-term, right? A relationship with Cambridge, like once they're in Cambridge's system, they're there. So it's important that you're networking and giving them that opportunity. The other thing that I would point out, and I just want to point out briefly, is I think people are looking for a silver bullet in the moment that we're in sometimes. And it's important to realize that these things don't happen overnight. Like Jasmine said, it's going to take time. It's going to take a consistent approach. And how we get there is going to be incremental, but it's important to be committed, as you pointed out, to making that change. Tiffany, talk a little bit about what this all looks like for you in terms of that commitment and the particular role that you have as an institutional advisor to incorporate diversity in your searches.
Hold on. Okay, sorry, I'm muting. Yeah, so first of all, I think just from an investment standpoint, we just recognize the importance of it, right? So I'll kind of give you a quick example. So like about 2 years ago, I was at a dinner and it was about diversity and diverse asset managers, probably some of the similar people that are attending this. And someone asked me, hey, so how do you, when you're talking to clients, how do you, talk to them about allocating to a diverse manager? And I said, I don't. And she looked at me like I was crazy. And I said, I never go to my clients and say, hey, I have this really great Black manager and I think you should, I really want to incorporate this manager into your portfolio because of X, Y, Z. We, in a lot of cases, we have discretion over client portfolios. So we're making investment decisions. And so, we're intentional about being inclusive. To Jasmine's point, we have a network. We went to HBCUs and we went to historically Black colleges and universities. We went to other schools and we're part of all these organizations. And so this is our network. These are the people that we hang out with, that we've known for years. So in those cases, we don't have to search for people for diverse talent, and we don't have to look them up in a database, right? Because they're all kind of part of our network. But we're also not, when you position a diverse owned manager as a diverse owned manager, you take the risk of having that client putting that manager in one box. The same thing as, an ESG strategy. Again, and I get very, I have certain feelings around this because ESG is really not a strategy. It's just a way of, it's just like, another way, a more deeper way of looking at an investment. And we should be doing all of these things. So first, I don't do that. We don't do that as a firm. However, we know that certain clients are really wanting to be intentional about allocating to certain diverse managers, and so we let them know. Oh, by the way, those and this is actually something that has happened consistently. By the way, the top 3 performing funds on your platform are diverse managers, right? So that's kind of like the first thing. But even as we kind of come into this time and again, kind of going back to who our clients are, and they're wanting to be very intentional about being inclusive of diverse managers, we do have these conversations and we let them know how we do things at Momentum. And I don't believe we have that same bias just because we are who we are. But I also want to just kind of get back to a point that Anthony was talking about. I think he was talking about them kind of implementing like the Rooney Rule. And so I think that that's great, and I definitely want to commend you guys for that. But just thinking like a step further, if you're working with the consultant and they are, and you say, hey, you've got to have a certain amount of, diverse asset managers come to the table, you also really have to have a conversation around criteria. And so Jasmine also mentioned, a spin-off talent. We're definitely focused on next up talent too. So if you have a consultant, and I'm just speaking broadly here, who has certain set criteria in terms of AUM, assets under management, in terms of, track record, then automatically in their database or, their due diligence process, it's going to screen out a lot of these managers. So that's another conversation that has to be had. And so what we focus on here at Momentum is, number one, we think about track record totally different than I believe some other consultants. So one of the things that I'm hoping everybody here is a Jay-Z fan. Yes, I did say Jay-Z. So Reasonable Doubt is arguably his best album. It's his first album. I see Justin nodding his head. And so we think about this as, again, it kind of goes back to this fact that we were entrepreneurs. We left big firms, really, top firms in the world, and had this audacity, believe that we could do something and start a firm that would add some value to clients. And so we understand that. And so we think about these diverse managers, even emerging managers. And so we're never going to invest in someone who, worked at the post office for their entire career, his or her entire career, and wakes up one day and says, hey, I'm going to start a fund. But what we will invest in is someone who has been at an existing firm for their entire career or several, who's had portfolio management responsibilities, who's gotten to sit there for years in someone else's box and really understand what works and what doesn't work. And one day they get the opportunity to start his or her own firm. And I think about that. I promise I'm going to connect it back to Jay-Z, because, that's what we're focused on. We definitely want next up talent, and that person, and again, Preqin has a study that actually lays this out that says first-time funds tend to outperform. So we're focused on Reasonable Doubt. We don't want Blueprint 2. So we understand how to think about this traditional due diligence criteria in a different way. We really take, what we did as a firm and how we came to be who we are, and really kind of apply that to some of these diverse owned asset managers, because their story is so similar to ours. We understand that they do have experience. They do have track record. They were just in somebody else's box.
Thank you for that, Tiffany. Tiffany, we're going to stay with you, A, because you referenced Jay-Z, and B, because I think that there's some questions that you can help us answer. In terms of looking for next up talent, right? How do you find that Jay-Z, right? Like, what are your roadblocks to finding and actually helping that next up talent? And once you've identified them, and making sure that you're catching them at their Reasonable Doubt and not at their Blueprint 2, which was a really bad album in my opinion.
Yeah. So first of all, I think it really, being part of a network is very important. And, I know that diverse managers exist all over this country, all over the world, but we are really plugged in some of these organizations, really focused on building authentic relationships. So I never have meetings in an office, right? With an asset manager at a certain point, yes. But I always do breakfast, coffee, lunch, dinner, those kinds of things, because I really want to connect with people and I really want to form an authentic relationship. And that's with anybody. and I will take most meetings unless it's something really ridiculous. And I think in doing that, for years of doing that, we've really kind of developed relationships. And again, it wasn't a week, it wasn't 2 weeks, it was years. And really, I think it's really important to know the lay of the land, to know, all of these different players, and to know, who's successful, who's not successful, who works at these different firms. I know, there are some firms right now, some private equity real estate firms, even venture firms. I know who's on the team, right? So I may have met them. Maybe I met like the founder, or like, the top guy, but I research and look at who's on that team. I look at the website. I'm all over LinkedIn. Like LinkedIn and I are like literally like best friends. There's a lot that you can find out. And we also talk to each other. That's the other thing too. Consultants talk to each other. If I'm looking at someone at a firm, and I'm looking at one person at a firm, and I'm like, that person's interesting, they were on this panel, or I see them saying this, I might text somebody some people who shall remain nameless, who are consultants, and say, hey, did you do due diligence on this person? And they might say, oh my gosh, absolutely, all day long. This person is so sharp, right? Jasmine shaking her head. And so we all talk, so I do look for those things. The cool thing about us too, I think, which is a little bit different, is because we do have one foot in consultant land and one foot in advisory land. So we get, invited to a lot of events that are more so for investment advisors. And it's a really crazy nuance that we're in rooms with people that aren't in this world. And so, and I've identified a couple really, really interesting, people who I know will spin off, and, they're not in this mix. So we're doing a lot, like my job is part, managing the institutional team in all of its clients, business development and due diligence. So it's a lot. I absolutely never sleep, but I do have a really good, strong team, and we kind of like divide and conquer, but we try to be at everything and really look for kind of like the unsuspecting stuff, right? So yeah, we get really creative about that.
And Justin, if you don't mind, I think I'd like to push that a little bit further as well, because
please.
I think it's one thing to identify the managers. I think the rubber sort of meets the road when you are underwriting those managers then for this portfolio. And I think that also should be touched on. And so I just wanted to have a couple comments there, because it's one thing to meet someone who, is that, Jay-Z at a reasonable doubt, right? Like, and so if we continue with this analogy, it's one thing to say, okay, well, he makes great songs, but he didn't have, was starting out with his own record label. And so how do you really get comfortable with that? I think that really does translate to what I think is, yes, bias exists, but I think there are a lot of these other practical barriers that it would be great to speak to this audience about how do we address. So we work with clients all the time that will come to us and say, absolutely want to change the world and move assets. But if you could give me a Black woman to own KKR, I would feel really great about that. The point is, like, while I hope that exists one day, that is not where we currently are in this market for tons of historical reasons. And so it's, how do you get comfortable with that fund one, where it would be great if they were a spin out, but maybe they left a private equity shop and they didn't get attribution for the deals that they worked on. I think that that's, again, where the network comes in. And so what we will do is be creative about, more than likely we're familiar with the shop where that person came from. And so maybe they didn't get formal attribution, but we can go back and look at our notes. And if at 10 years ago, you were talking about that person as if they were leading that deal, we can get comfortable with the fact that they led that deal, and we can go in and reference those. If someone, maybe doesn't even have a formal track record, they entered private equity, one of the largest owned, Black owned venture capital funds right now is Base 10. Base 10 is led by Ade, who is Nigerian, raised in Barcelona. He didn't come up through a venture capital shop. The way we were able to get comfortable with that was using his track record from when he was founder of basically the Facebook of Barcelona and doing attribution on that track record. And so I think that not only does there have to be the intent, I think you really have to be thoughtful about how are you specifically underwriting and investing in those deals. And for this audience as asset owners, understanding when you're looking, when someone brings you an idea, to also put those into context. There might be a reason why someone is not investing 2% as their GP commitment in a private equity fund if they didn't come from a place where they are extremely liquid and have that to invest. I would argue that maybe you should measure that in terms of their liquid net worth that's in the fund rather than the percent that's invested in the fund, and really working with your advisors and your own internal teams to really be more thoughtful, I think, about the context and the measurements that we're using.
That's super helpful. I don't want to cut us off. I want to go ahead and get us into the Q&A. Jasmine, if we could stay with you for a second. Mike Ibarra had pointed out that there is a challenge to increase diversity in investment allocations, and that there's a serious lack of diversity in the asset management business that needs to be rectified. Do you agree that there is a serious lack of diversity?
Absolutely. I think we all are aware of what the current circumstances are. And again, I think this is a systemic problem, right? So there isn't, to your comments earlier, there isn't one silver bullet. So it isn't solely go out and invest in these managers. It's an and. So, for example, I think we've been working through what is going to be our response to this current environment. And it's not, okay, go out and hire more investment directors that are more diverse. Yes, we should do that. But we also have to work with SEO and Twigo and Girls Who Invest to also increase that pipeline. We also need to be thoughtful about how we're entering campuses. Not only, yes, do HBCUs, but also the schools that we were already going to, and who are we addressing on those campuses, because Black students live across all campuses. And so I think it's really a systemic problem, and we have to be thoughtful, but the talent within consulting firms, I think, definitely needs to be addressed as part of that systemic solution as well.
Perfect. Kaede, are there other questions that you've had come in that we want to make sure that we address?
Yeah, thank you, Justin. So let's bring in some participant questions here and start with, I kind of looped them in or categorized them to highlight the ones that seem to be top of mind for many. And please continue to use the Zoom control panel to ask questions. But the first one is just on, you were all talking about there being more data. So some of the participants are interested in kind of the breadth and the scope of the market. So like how much data is out there on diverse managers, how many institutions are making this a priority, how deep is the market, and then also tying into ESG investment firms and how you're looking at the level of diversity of these ESG managers or diverse ESG managers. So any of you would like to take a crack at that question?
Yeah, I'll take a stab
Yeah,
at
I
that.
can start. Oh, go ahead.
I'm going to segue to you very quickly. I'll just take a stab and a quick plug to plug the Knight Foundation. The Knight Foundation has done 2 studies on diversity and asset management, and then 1 study on diversity and asset management as it relates to foundations. They're also a very kind supporter of the Diverse Asset Managers Initiative and the client of Cambridge, or they use Cambridge as their consultant. So I'll go ahead and kick it over to Jasmine, but they're a great resource to look at as well.
Yeah, I absolutely agree. I would say that the numbers are in there. Obviously, we all want the numbers to grow. What I push back on is using those numbers as a reason not to invest. Ultimately, if you think of anyone's portfolio, right, like you're not investing with 500 equity managers. You don't need 500, right? So even if we're saying there are 100 African-American owned equity strategies that are in the market, right? Like if there are going to be 2 in your portfolio, there's still enough to start looking, right? Like, and I think it's important to address that because I think we hear that, oh, there's only less than 2%, but actually the assets that are invested with managers are punching below the weight of their peers. So if you look at that Knight study, if you use a majority, less than 0.8 of assets are with diverse firms, but it's because they're being underinvested in, right? So the numbers are there. We just recently, my analyst was working on this study. On the private equity side, the numbers have been growing. What I would point out is that it is somewhat chunky, right? So there are asset classes where it is easier to find diverse firms and some that aren't. If you look within private equity, venture has obviously been like the hottest area of growth. I would argue it's because of the hurdles that we put in terms of who we think is qualified, and it's easier to start up a venture strategy than a buyout private equity strategy. But there are enough there, as well as, right, like on the public side, hedge funds are going to be harder, real assets are going to be harder. But I think the point is, I think we have to start looking, because what we've seen over history is that when you do have demand, the supply shows up.
I can
really. Oh, I'm sorry. Should I go, Anthony?
Yeah, go ahead, Tiffany.
I'll be quick. So for me, and I know the person also asked about ESG. Listen, like personally, I'd love to save the world. And I'm sure so would my clients. What I'm interested in when it comes to ESG is how, and I'm including diversity in this, is how does this contribute to alpha in a portfolio, and how does it help, or how does it help manage risk? And so, Goldman Sachs has research on this. A lot of, organizations have research on this, looking at these metrics and, the contributors of alpha to a portfolio. So traditionally, the E has been studied over and over and over again. And, what it really says that with a lot of these metrics, if a company comes out and makes a statement or a policy, right? So, and again, I'm including diversity in this because I do think that we're in the Super Bowl right now where we're getting all of these additional data points. And then a lot of people are looking at diverse owned asset managers. If you, if you come out and you say, okay, we've got this policy on, I don't know, diversity, and you're able to measure it over time, right? And you have like measured progress over time. The research shows that you're able to add anywhere between 80 basis points to 120 basis points in alpha to a portfolio. If you come out and say that you have this policy on diversity and it's not measured, research shows that it detracts from the performance. So I'm speaking on that on an individual company perspective, but then also in like a broader sense as well. And so that's how I think about all of these things. I'm always looking at things from a portfolio construction standpoint. And I really believe that, as we're kind of going through this particular time period in our country, there are more data points added to this. And so I don't think, again, that we need to be talking about these things in two separate silos.
So just to add to the conversation about ESG, and so, we as an endowment fund, a progressive institution like ours, we're really trying to effectuate change in regards to racial equity. So in addition to the Rooney Rule, one of the things that we're doing is we have 14 managers. We are soliciting every one of our 14 managers, most of whom incorporate ESG into their investment management practices when they're evaluating companies, either their stock or their bonds. And we are soliciting them to ask them what racial equity overlays are they incorporating into their investment policies to evaluate companies, similar to using other criteria within the ESG framework to evaluate companies. We're going to do that with all 14 of our managers. We're going to do that with any new manager that would like to manage money for us, right? Because we think this is really where you get down to really effectuating change in the investment management practices of these underlying managers. We suspect that most of our 14 managers will not have any racial equity overlay or have utilized criteria to evaluate a company along a racial equity line. But then we were going to give them a chance, right, to come back to us and say, here's what we're going to do. Here's how we're going to add racial equity overlays or criteria into our investment management practices, right? And the value that it can create. And Tiffany brought up some good studies. McKinsey put out 2 studies, one 2 years ago, one earlier this year, about how companies that are more diverse in terms of their employee makeup, right, perform better than companies that are less diverse. So that's our intention. We think any endowment fund that really wants to effectuate change really needs to go to their managers, their underlying managers, and then ask them, what are they doing to incorporate racial equity overlays or criteria into their investment management practices. If we get resistance from managers in terms of saying we're being intrusive into their investment management styles or strategies, then maybe that's not the right manager for us, and we will eventually look to make a change because we're serious about doing this. If it's a private markets investment that we're committed to, we'll wait until we have full realization on the portfolio, but we probably wouldn't re-up with a manager that's not serious about going to the next step here and incorporating racial equity criteria into their investment management practices.
Anthony, maybe we could stick with you. There's a question around making the pitch. So how do you make the case to an investment committee for allocating to diverse-owned asset managers? Maybe you can speak from your own experience and talk about what that conversation looked like.
Sure, it was data. It's data-driven because at the end of the day, we're fiduciaries and we have to, 1, preserve capital, 2, grow capital, grow the corpus enough that we can meet our annual spending rates and grow the endowment fund over time. So the case, as Tiffany has eloquently put, is, investment managers of color tend to outperform managers, their peers in their respective asset classes. And so there's data that you can find from NASP, from NAIC, National Association, NAIC on the private market side. And what I would suggest is, we can put up a whole bunch of resources for folks to help make that case to their investment committees. And it's that conversations where it starts.
Justin, there is a question for you on the SEC hearing on July 16th. Do you want to talk a little bit about that?
Yeah. I'll take a little bit of time to talk about what's kind of going on in DC because that's where I'm based. But before I do that, I do want to reiterate Tiffany's point. ESG and investing in racial equity don't have to be separate lenses. In fact, they should all be one lens, and we need to continue to look at it that way. One of the things that we continue to push at DAMI is that this is not a racial justice issue. This is an issue of fiduciary responsibility. And if you're costing your organization alpha, particularly in those basis points that Tiffany's talking about, then you're not meeting that fiduciary responsibility. So it's important to take that responsibility very seriously. To that point, people in DC have started to take that seriously. You have the SEC, who has an asset management advisory committee, which we were called to speak at, that spoke directly to diversity. It featured Gilbert Garcia of Garcia Hamilton Associates, that some of you might know, as well as my boss, Robert Rabin, to talk about what diversity in asset management looks like and where the field is. It was a conversation similar to this, but the SEC is concerned with action and concerned with making sure that people are meeting that responsibility, that they're learning to track and report the data in asset management in the same way that we track and report the data in other things. As John Rogers always points out, the University of Chicago was tracking construction, they were tracking restaurants, they were tracking the lawyers and all kinds of these same demographics that asset management just wasn't doing. It's time for asset management to catch up, right? It's time for us to get there. In an effort to get there, Congressman Emmanuel Cleaver of Missouri, and Congressman Kennedy of Massachusetts have recently sent a letter to 25 of the largest endowments in America, asking them what they're doing in terms of diverse managers. Are they hiring them? How many of them do they currently have? And what their process is for getting more diverse managers on board. These congressmen are taking it very seriously. They want to see answers. They want to create a baseline. And the thing about creating a baseline is it creates a measurement to which people can be held. I've seen a couple of questions about, how many diverse managers should we hire to meet a certain requirement or to make our IPS worthwhile. Again, I think that goes to the point of customization. You have the complete authority to customize it, but it's important that you track and report those numbers. Be public with them, talk about them openly, create a baseline for yourself that you feel like you can meet, and then grow from there. Again, there is no silver bullet to this stuff. So whatever the numbers are, they're fine, right? Be open with them, be honest with yourselves, be honest amongst your investment consultants and your advisory committee about what this looks like for you all and what your baseline is, and then continue to grow from there. And IEN and Cambridge and Momentum Advisors and Dami are all here to support you in whatever that word looks like for you.
Great. And with 2 minutes left, I think we want to end on a note of action, and a lot of participants also had questions on this, but what, from your perspective and from where you're sitting, what are the actionable next steps that the audience members can take after this webinar?
Let's start with the panelists. Tiffany, do you want to run through that real quick?
Sure. Do something. It's very simple. Whether it's have the conversation or just go back to what you said you were going to do if you said you were going to do it, but just do something and mean it.
Jasmine?
Define your target, right? Like how you want to define diversity, and then conduct an audit of your existing portfolio and then set targets from there. I think I would also add that, as Tiffany mentioned, we all share ideas. Obviously, we are investment managers for several endowments and foundations, but what we also know is true is that CIOs also share ideas. So the next time you're sharing an idea about investment, feel free to call your peers and also tell them, here are the diverse managers we're using, here's where we've been successful, here's who we think you should take a look at, just as you would do any other manager. Start socializing ideas.
Anthony?
Yeah, if you're an endowment fund, commit to the pledge, the IEN pledge, and to have this conversation at your next investment committee meeting, and to use data and statistics to say that, to show that the utilization of diverse asset managers can add value to the portfolio from a performance standpoint. And then the third key thing is what I started with, which was, if you're serious about this, you have to incorporate it into your investment policy as the governing document, and that will anything less than that, again, will be viewed by many as performative.
Thanks. I'll close with the fact that I went to a school called James Madison University in Virginia, where our motto is to be the change. And I encourage all of you all to do that, right? You have the opportunity to be the change, to lead a sea change in asset management. So if that looks like tracking and reporting for you, so letting everybody know what your numbers are with diverse managers, then that's one step. If it looks like telling your consultant to answer the investment consultant survey that the diverse asset managers does, that's another step. And I'm happy to walk you through that offline. Or if it's just networking amongst this peer network, right? And finding actionable steps to do something, as Tiffany said, then that's also available to you. Please lean on IEN, please lean on Kaede, please use the connections that you have. Don't get stuck in what my therapist calls analysis paralysis of not making any decision. Take some time to do something, because this is a great opportunity to do that. With that, I'll leave it to IEN to close us out.
Excellent. Well, thank you again to Justin, Jasmine, Tiffany, and Anthony for this amazing conversation, and to all the participants for your engagement. We received a lot of questions, and we'll try to follow up by email on questions that we weren't able to get to. And before we close, we also want to take a moment to do a quick poll to see if you'd be interested in having a follow-up conversation with our panelists later this month through our community conversations, which is a space we host for a more informal, small group, interactive style dialogue. So if you can take a quick second to fill out the poll that should have popped up on your screen while I was talking, that would be great. Well, thank you again, and have a great afternoon.
You too.